Hi, welcome back to our conversation on financial reporting. In this session, we will focus our attention on Wipro's buyback. Wipro is once again in the news. It has announced the buyback. So in this presentation, I'll make some observations and share my views on this buyback of shares by Wipro. But before we get into the buyback of Wipro, let me recap. Buyback is a highly regulated phenomenon. Buyback is a process whereby company repurchases its own shares from the shareholders. It's a process of capital reduction in India. The objectives of buyback is normally mentioned in the offer document is to improve the shareholders' value, reduce the outstanding number of shares, change the capital structure. In the process, all other things remaining same, increasing the earning per share. And sometimes this also signals the management's confidence in the company. There are different ways the buyback can be done. It can be a tender offer or it can be an open market. In case of open market, the company keeps on buying the shares from the open market. And that happens, the transaction happens at the market price. The entire process is flexible. Anytime it can happen. And there is a lower uncertainty about the entire process. Whereas in tender offer, there's a fixed price and there is a time bound and there is a clarity or a higher certainty in the process. And with this short background, as I mentioned, the buyback is always a very important strategic decision and highly regulated by SEBI in India. And there's a very clear accounting treatment of buyback is also been given by the SEBI's regulations. Wipro is not new to us. Wipro is a very well-known company of India, founded in 1945, Bangalore based. It is a global IT consulting and business service company. In India, it is listed on NSE and BSE, and its major segments are, as mentioned above, IT services, consulting, cloud computing, and AI solutions. The broad macro details of buyback, the size of the buyback has not happened, it's just announced. So buyback size is 15,000 crore. The price offered is around 250 rupees per share. The maximum number of shares to be bought back is 60 crore shares, 600 million shares. And the record date is 5th June. Record date is 5th June. And the method they're adopting is a tender one because the price is given here. And the objectives mentioned in that offer document is to return the excess cash to the shareholder. This is important for our conversation. Who are these shareholders? Who benefits from the shareholder? In the process, because there will be an effect on the balance sheet and the cash flow, there will be an impact on various financial ratios like earning per share, debt equity ratio. It is also expected to stabilize the promoter's holding. This is ambiguous. What do you mean by increasing the holding stability? And the company is expecting that this move will once again send a positive market signal. But this is not the first time Wipro is doing buyback. Wipro is known for giving money back to the shareholders. in the last 6 years, we can see that 10 years, you can say, that from 2016 to 2026, the latest one is in 2026 now. In June 30th, 2016, 4.3% of the paid up capital was bought back. And the buyback price was 625. The amount of buyback was 2,500 crore. I'll come back to this acceptance ratio. In 2017, the company again announced buyback 6.1% because there is a cap. No, the objective of this particular presentation is not to get into the regulations of the Companies Act or SEBI's regulation. So there is a cap on the buyback. Buyback not to exceed 25% of the capital or the net worth. So it is well below that particular cap at that point of time. So in 2019, again, there is a buyback of 5.4%. The amount is 10,500 crore. 2020, 4.2% of the capital was bought back. And in all these cases, the price offered was above the market price. So invariably, the buyback price will be greater than the market price. Another 9,500 crores was given by the company to the shareholders. In 2023, 4.9% of the capital was bought back. In the process, 12,000 crores was given to the shareholder. And now it is 15,000 crore. 15,000 crore buyback size. So historically, we are able to see that Wipro has been transferring, distributing cash, returning cash to the shareholders. 2,500 to 12,000 crore from 16 to 7 and 17, 18, 21, 23, and now 26, 15,000 crore. So this is the largest buyback that the company has announced. This is where it's important for us to observe that during all these buyback, the promoters have been tendering their shares, or the company has been purchasing the shares also from the promoters. So in the last 5 buyback, the company has acquired from the promoters 31 million in 2016, 199 million in 2017, 2019, 226 million, 229 million in 21, and in 2023, 194. So from 2016 to 2023, 879 million shares have been bought back by the company from the promoter group. So that means the promoters are getting this cash from the company. Following 2023 buyback, the total number of shares held by the promoters and the promoter group decreased, obviously, because the company is buying back the shares. But their overall percentage of the shareholding has marginally increased. So on one hand, the promoter is getting the cash from the company. On the other hand, the promoter's stake, the shareholding increases. So this is important for us to remember, that the promoters can increase the stake in the company by infusing more capital. Or promoters can also increase the shareholding by asking the company to go for the buyback. So in this case, we are able to see, which may be the case in most of the other companies too. So the total number of shares held by the promoter and the promoters group decreased, but their overall percentage of shareholding has increased. For example, pre-buyback 2023, the promoters group held how many? This is 4,100, 4,000, around 4,000 million shares. And that has come down to 3,800 million shares. But the number of shares held by this promoters group has come down marginally. But you can see that stake has gone up from 72.9%, 91% to 72.97%. So one of the objectives of buyback, we can say that the promoters' stake increases. Of course, this is also a positive signal. The promoters' confidence in the company is high. Who are these promoters? One of the largest promoters is the Azim Premji Trust itself. Azim Premji Trust, a key entity within the promoter and promoters group, received approximately 16,000 crore in cash across this 4 buyback. A large amount of money, therefore, has gone from the company, which is a listed company, to a trust, which is not listed, a private. Now, what is that company, that trust doing with the cash? We don't know. All that we are able to see, that cash is transferred from the company to the trust. Official stance, SEBI's regulation. The official document includes a regulatory disclaimer stating that the buyback will not result in any benefit to the promoter or promoter groups, other than the cash received and participating in the changes in the shareholding. Obviously, this is a benefit, isn't it? The company is getting cash, and also the promoters are getting cash, receiving cash, and also increasing the stake in the company. So received by the promoters, that in the last 5 buybacks is from 1,900 crores, 6,300 crore in 17, 2,000 in 2019, 7,300 crore, 9,100 crore in 2021. 2023 is 8,600 crore. A big amount. 74% of the buyback proceeds, buyback cash flow from the company to the promoters. 74% of the total buyback, total cash outflow goes to the promoters or has gone to the promoters. So the promoters have received around 33,453 crore. What did they do with that money? That we don't know. All that is visible in the financial statements over a period of time, that 33,000 crore has been transferred, is it illegal? No, it's not illegal, of course. But there is a transfer of cash. What can the company, could the company use that money for the further growth? Maybe yes, it could have. But buyback is a route, is a means, is a process by which cash can be transferred from the company to the promoters and to the other shareholders too. Of course, other shareholders also take the money. But in case of Wipro, because the promoters and the promoters group has a very large percentage stake in the company, so a significant portion of the cash transferred or paid by Wipro through buyback, similarly through dividend, goes to this particular group of individuals or group of organizations. And this is not just the case with Wipro. In Infosys also, Infosys has been using the route of buyback to pay back cash, they say excess cash, to the promoters, to the shareholder. Infosys also has gone for buyback or used buyback to pay off, to give cash to the existing shareholders, including promoters. Similarly, TCS is known for regular buybacks, and TCS has paid or cash about 66,000 crore only through buyback. I'm not taking the dividend here. So IT companies, because they're cash rich, so there is a significant amount of the cash is transferred, given back to the promoters and the shareholders. And buyback is a means to do that. Buyback is a means to do that. So who benefits from the buyback? Somebody can ask this question. So obviously the large promoters get, because the shares are invariably bought at a price higher than the market price. Let us see in general impact on the financial statements. Because of buyback, the assets of the company reduces. Cash and cash equivalents. When Wipro pays shareholders cash decreases approximately to the extent of 15,000 crore. We don't know. So that, for example, as we mentioned, cash goes out of the company. And similarly, on the balance sheet, the equity gets affected. Because in India, the buyback is generally treated as a capital deduction. To the extent of the shares bought back, the capital is reduced, capital is removed, the shares are withdrawn, shares are removed from the circulation, are cancelled. So to the extent of the face value of the share, rupees 2 here, Wipro's face value is 2. And shares bought back will be 60 crore. So 120 crore capital will reduce. The excess money paid over 15,000 crore minus 120 crore will be adjusted against the retained earnings and other reserves, following the accounting regulations, accounting treatment of buyback. So equity reduces because the capital has come down, and to the extent the retained earnings goes down, therefore the equity goes down. All other things remaining same, the debt equity ratio will rise. Why? Because the debt by equity, all other things remaining same, at that point of time, the debt equity ratio rises because equity falls. In this, a company like Wipro, Infosys, TCS, these are debt light companies. So buyback is not going to affect the leverage in big way. In fact, there is an overall condition of buyback, that the buyback, post buyback, the debt equity ratio not to exceed 2 is to 1. But in all these three companies, the debt equity ratio is very low. So leverage is not getting affected. Impact on a cash flow. There's a huge cash outflow, will be 15,000 crore now. Where is it CFF, CFI or CFO? Cash from financing, cash from investment, or cash from operating activity? Cash paid to the shareholder is treated as per Ind AS 7 is a cash from financing activity. Cash outflow will be shown as a cash payment under CFF. No effect on a CFI. It's not an investment. It is not an operating. So cash outflow is shown in the cash flow statement using Ind AS 7 under cash from financing activity. What will be the impact on share price? Not only for this 2026 expectations, but if you see the past, the previous buyback, the impact of buyback on share price has been generally been positive in a short run. And now they call it announcement effect. The company is going to buy back the shares. So at a price higher than the market price. So there is a tendency more people to buy the share. So positive, the price may go up. Mixed in the medium term. Ultimately, the price depends on the fundamentals. So if you don't get if you apply for buyback and if all your shares are not bought back, so nothing to worry there because the market may improve, the price may go up, even above the buyback price. So hold on if possible. And since the company is going for buyback and the promoter's confidence seems to be high because the promoter's stake is going up, so the fundamentals are strong. So even if your shares that you have applied for buyback are not accepted, that is where I was mentioning about the acceptance ratio. There I have shown it that go back, acceptance ratio. It is not possible for the company to accept, for the retailers, to fully, whatever you say, I want to surrender, I want to sell, all shares may not be bought back because of the prescribed ratios. So we can see that in the past, except 2016, it is the acceptance ratio. You tender X, the company may only accept 77% or 33%. So if you have given for buyback, you have shown interest and all shares are not bought back, it's not a problem because the company's fundamentals are strong. The company is doing well. The promoter's stake is going up. So despite the fact that a huge amount of capital, huge amount of cash is going out of the company, the fundamentals are strong. So therefore, overall, we can see that this is not a commentary on the fundamental analysis of Wipro. This is only a comment on the Wipro's buyback, the past and the present and future. So Wipro has used buyback as a means to give money back to their shareholders. And the biggest beneficiary is the promoter and promoter group because more than 70% of the cash outflow is transferred, paid to this particular group from the company. So to that extent, 15,000 crores, 70%, around 10 to 12,000, 10 to 11,000 crore will go to the promoter group, like Azim Premji Foundation. What will that foundation do with that cash? Maybe that's not mentioned in the letter. So that brings us to the end of this. So all the best for this buyback if you are a shareholder. Otherwise, keep a watch on the company's fundamentals and see the market reaction to this particular business decision. Thank you very much.